Three Stock Lunch, where we take a look at three big movers of the day. Here with our trades, Eva Ados, CIO of ERShares. Up first, Eva, is Robinhood. Shares of that company jumping on some positive headlines, including better than expected trading volumes in February. Shares are up more than 40% so far this year. Your trade on the hood.
It is a buy. They're having a great day today, up about 7%, even though the general market is down on inflation news. They did announce an increase in their net assets under custody of 16%. That's only in the last month. That's a huge increase, and it's following the approval of the crypto ETFs. Now, their revenue growth is extraordinary. They have a 37% revenue growth. Compared to their peers of -6%, it's an amazing growth story. It is not profitable yet, but they are making progress with their margins and also their margins, and also they're cutting down their SG&A costs. They're gaining economies of scale, and that shows. And so we might even see them turn profitable next year, which will be another major catalyst. But as of now, we are seeing them enjoy the fruits of crypto trading, and we still think there's room to run.
Up next, we have Citigroup. Citi's getting an upgrade by Goldman Sachs to buy from neutral and raised its price target. The analyst says Citi can both grow its revenue and deliver on expense reductions. Eva, what's your trade on this one?
I'll disagree with that one, and I have it as a hold because one of the reasons why they upgraded it is that their PE ratio is better than the competitors, but it's slightly better, and to us it doesn't justify a buy in this case. We need to mention that this is a company that has fallen from grace. It has come down. The stock has come down 90% in the last 20 years. Unfortunately, their best days are behind them. It's a large bureaucratic company. Their revenue growth is extremely low. It's well below peers. It's actually almost zero, and their income growth is -38%. Another extremely low metric. I wouldn't buy based on this. However, they do have a dividend yield of 3.7%. So investors who are interested in dividend yields might want to get into the stock for the dividend yield. But if you are interested in appreciation and growth, this is not a company that we would encourage investors to buy.
All right, let's move on to the last one, which is US Steel. President Biden expected to oppose an acquisition by the Japanese company Nippon Steel, expressing, quote, serious concerns. US Steel trading a little bit lower today. What do we think of US Steel, Eva?
It is a sell. The ticker symbol is X. This was the original X well before Twitter even existed. It dates back to 1901 with the famous entrepreneur Andrew Carnegie. It's a sad story. This was a great U.S. story, a great U.S. entrepreneurial company. It was the #1 steel producer globally. Now it's the number 27 steel producer. And unfortunately, in this market, if you don't have economies of scale, it's really hard to compete. So I think they're in a downward trend. And in fact, they're not even a large cap anymore. They are a $9 billion market cap company. And today, for example, Microsoft is moving more than U.S. Steel is even worth. And as you said, there was a rumor for a potential acquisition. It looks like the Biden administration will block that acquisition to save U.S. jobs. It's a political decision. We have an election year. And we also need to remember it's a short-term decision because, unfortunately, if this company doesn't get acquired, it won't be there in the long term. It's a sell.
It's a sell. All right. Pretty clear point of view there, Eva. Thank you very much, Eva Ados.
Thank you.
We appreciate it.